So this panel here is going to talk about various aspects of managing your money, making your money behave, right? And so we're going to start off with my good friend Brad here. Brad and I go way, way back. Brad's a musician, keyboard player, has been in the music industry here in the West Texas area for a long time. Fabulous human being, great piano player, organ player, and CPA. And okay, for our first question here, Mr. Brad, as you invest in your art and spending money to purchase equipment, websites, supplies, etc., how is a good way to keep those records, and can all of these expenses be reported on your taxes?
Thank you, Mr. Banks. So just as a follow-up to my introduction, I did realize at a tender young age that my possibility of being a rock and roll star was not going to be very high, so I did have to get a day gig, and so that's why I ended up going on to school, and I got my accounting degree and my CPA. So the thing about being in business is learning from the get-go that you've got to keep track of stuff. And so from the most rudimentary of, I got a box full of receipts, which is pretty typical for a lot of folks, not just music. I have farmers, and that's their accounting methods and stuff. So that you can have that as the way you keep up with stuff, or you can sophisticate it to however many levels you want to. But you do need to be able to figure out a way to track what's going on with your business. And then we're talking about music. There might be, is anybody in here not a musician? Are there artists here? Okay, so artists too, that are musicians artists? We'll have that discussion before. Okay, so but that where music is not your form of art delivery, you need to keep up with your expenses, the things that you incur to make your endeavor happen. So the most inexpensive thing I could find just in terms of being modernized besides the sack or the box is if you know how to use a spreadsheet. So the Excel spreadsheet is a really great tool. Once you figure out, okay, I have my basic spreadsheet set up, and then you can use it over and over, copy it. And so if you've never gotten any kind of skills in Excel, that's a good one to work with. And if you take it to an accountant or H&R Block, they'll be happy that you've got that. You can then graduate from that if you want something to be more automated and use something like Quicken. And then if you really want to move up into the accounting world, you use QuickBooks would be those. Quicken and QuickBooks are Intuit Microsoft-driven products. They're not as happy with Apple and Mac. So they have versions out there, but I know a lot of the artists, people love Apple and Macs. So it's just know that those particular softwares are not as robust when they're running on those platforms. But anyway, but thinking about tax deductions, if you spend money on something that is necessary and they call it ordinary for you to be able to complete what you're doing in your endeavor, then by definition it should be tax deductible. So that, if you're an artist that painting is your media, so all the things you buy for that, the boards and the paints and the everything else, musicians, you're buying gear, you're buying amplifiers, you're buying these things. All of those things should be part of your deductions, and you want to keep track of that. And then the income side is a whole other discussion, but I'm probably way past my 3 minutes. So is that enough for the moment?
We'll come back to you.
Okay. All right.
Mr. John, just get us all started on how we start keeping up with how you make a budget.
Good, afternoon. So you'll hear some similarities, I think, between Brad and I, partly because we do the same thing too, overlap. But from the business, accounting, and finance side of the personal side, it's a lot of similarities. So as Brad said, keeping up with expenses is number one. And so Just from thinking of a nice word to use besides budget, because budget feels very restrictive and can't go have fun. I like to say spending plan. It's the same thing, right? But plan what you're going to spend your money on. So like Brad said, get an Excel spreadsheet, pen and paper, just track what you spend on a normal basis. At the end of the day, you want money coming in to be greater or equal to money going out. Don't forget about taxes and those type of things. So that's the easiest way to start keeping it and tracking it. I think the other real benefit is over time, as you track it, you see what you spend on things. So one project we give students is to track their spending for 3 months and then total it up and look at what they've spent and see if they value that, right? So turns out places like Chimmy's and Starbucks get a lot of their money, and they didn't realize how much it cost over a 3-month period looking beyond that one night, right? So that's a good way to keep up with it too. And then monitor it and change it, as needed. But that's the best way to make sure that you don't end up the opposite, which is spending more than you're actually bringing in.
Well, I know that financial guru Dave Ramsey and their organizations, they have, and I think it's a free app. It's called Every Dollar, and that's just one of the many, things you have available for you to help you keep track of your money, right? Roger, some performers or artists start out and they may not have a lot of capital. That's an understatement. What is the difference between applying, say, for a loan, acquiring a line of credit for my business? What documentation will someone need to do either one of those?
Well, I don't know if you probably all have had a loan, but if you're going to apply for a loan, you're applying for a set amount. You would be applying for like $10,000, and then you would make payments set up per month on $10,000 plus the interest. And so if it was for 60 months, you would pay that payment for 60 months, and the loan would be done. A line of credit, which would be helpful, but they're much harder to come by, is you would apply the same way as you would for a loan for like $10,000, but you could you request the money up. So you may want $3,000 to start with. So you get that money in your account, and you're only paying the interest and the payment on the $3,000. So then, as you need more money, you're paying on that throughout the months. But as you need more money, you may need $3,000 more. So you get that money. So it's a revolving line of credit. It ebb and flows as you pay for it. You can never go over the $10,000 that you initially applied for and got. But like I said, those are harder to come by. To get a loan or a line of credit, you would need your driver's license, proof of income, and then references. So that's what you would do.
Just because I've seen this in all my career, the word he just said, proof of income. Musicians and artists, and they hate to report income for taxes. But yet, if you want to go talk to Roger and his institution, you must have income for them to talk to you. So you have a conflicting emotional state. I don't want to report stuff, and I think I got to pay taxes, but I want to really do some more things, and my creativity it could go tenfold up if I could borrow a little money. And so they're not loaning you money unless you can have proof of income.
Well, I know things have drastically changed for the better over the years for musicians, writers, artists, dancers, people in the creative community. When I was a young man back in the 70s, enlisted my income and my sole job as a performing musician songwriter, I could not buy or could not get a credit card. I could not buy life insurance. I couldn't be insured. In fact, I didn't have a credit card until after I got married because my wife had real good credit. But that has changed over the years, and so we've come a long way. But it's a sophisticated market we're in now. Okay, Brad, any tips, on consistently getting paid What's the best approach? This is always a challenge. Do you like a particular system? And how about contracts for gigs?
We need the lawyer if we're going to talk about contracts. And I must say that at my level of musical experience, I never had a contract. Take that back. Back with Lucille Atchison, we had a few. But so that's more specialized, and it's probably happening when you're talking about a little bit more real money and using contracts. But as to how you get paid and things, when I was trying to figure that out on this question, I wasn't quite sure if you're heading down thinking about more like royalties and ongoing payment streams and keeping track of those kinds of things, or what were the things about other things?
More in the way of gigs.
Gigs.
Yeah.
Okay, well, again, if you have an accounting system that's, say, more sophisticated than Excel, you can use that as a way to track what you're doing. You can create invoices or bills to the various clubs and things, and you could actually, you get done paying them, say, well, here's my bill for, I played for you, and here's $100 for that. And if for some reason you get to talking and you don't get paid, or that they don't have the cash, and we'll send you a check, then you've got a system to help you remember, I've actually not been paid by some people. So having something to remind you other than that, my experience as a musician has been more that, so much stuff is done in cash. So from these bars and things, so just, that record keeping of trying to both keep up with what you made and making sure that you got paid what the agreement was. Okay, if it's a split at the door, yeah, who's keeping track of all that, and that gets into another conversation. But for maybe then the non-musicians, if you've got your work out at various galleries and doing things like that, then you really should have, again, some basic accounting system that helps you know, I've got 4 paintings that are at this gallery, and I've got 5 things that are up in Taos and different things like that. And you then check on periodically to make sure that, do you still have my inventory? Oh, you sold something? Oh, well, I haven't got a check from, so and those, by having some kind of a system, a computerized system, more likely than just having it on pages of paper, will probably help you do a better job of tracking that you've got product that you've delivered out there, and have you actually been paid for it.
One of the advantages we have now with our digital society is an email basically serves as a contract. And, everybody knows the 2 main purposes of a contract is, both parties agree to what they're agreeing to, right? And then 6 weeks, 6 months, 6 years down the road, both parties have to remember the same thing because it's in writing. So that's an advantage that we have now that in all arts. But, like Brad was saying, you've got a contract with a gallery for your paintings, or, you've got a contract to do a dance recital or whatever. It's right there, and you've got it in writing. So keep up with those. Okay, John, how and when should you plan to invest? What is a reasonable amount, especially for beginning musicians, artists? Is the traditional savings account best to do, or do you have some other best practices?
Sure. So I'm going to back that question up a little bit and talk about some foundations before you start to invest. But first, like Quicken, I think it has a personal side to it also. But Mint.com, there's a lot of personal budgeting things. You can even tie in your bank accounts and your credit card accounts, so it kind of brings everything into one place. So you might check those out as well. So before investing, I would encourage you to do a couple things. One is the budget, or spending plan, excuse me. So look at what you're spending, see what's left over, because you don't want to save what's left over, obviously. But first thing, save what we'd call an emergency fund, right? So something, it might be 3 to 6 months, typically we talk, of living expenses. And for you, that could mean you didn't have a gig for a while, right, and had to float some money. Hopefully never see a pandemic again, but I know that was not good. And so having some things you can dip into that is what we say liquid, something that is not going to have gone down in value and it's easily accessible. Savings accounts at a bank, checking accounts at a bank, not the stock market, right? Because the stock market could be down 50% when you need the money, and poof, you're having to dig somewhere else. The real purpose too is, number one, not to have to dip into investments when they're down, but not have to borrow at such high rates like a credit card. And so try not to let a credit card, at that 15, 20% interest be your emergency fund, because long term that's just working against you at that rate. So get that emergency fund. If you have to use it, make sure to refill it as your first priority. Next thing I think about too is making sure you're adequately insured for things. So we, brought up insurance. There's a lot of funny TV commercials about, I can't pay my streaming bills, but I can reduce my insurance to do that. Not a good idea, right? So make sure that you're insured for things that could really be detrimental to you, right? So it's easy to go get the minimum amount of auto insurance. It doesn't do anything for you if you hit a Porsche or a Ferrari on the road, right? That's not covering that. So make sure like those little things are covered. Life insurance, if you have kiddos, and family you have to take care of afterwards. So make sure all that's there, because there's no point in investing again if some of these big risks can come through and derail everything. Renter's insurance, if you have stuff, if you don't have a home, if you rent, you can get renter's insurance, cover everything that's inside in case something happens. We do have strong winds and tornadoes still around the area. So kind of hit those two spots, and now if there's still money left over and you don't need it anytime soon, that's when to think to invest long term. So if you're going to save, say for a new piece of equipment or something next year, I would invest in the stock market to reach that goal, right? Because again, it might be down 50%, and you're either going to have to kind of substitute what you were going to buy with something cheaper, or pull from somewhere else, which is probably your long-term future. So those kind of few steps before you say, okay, I'll invest. Then if you really want to invest, and I know I got 3 minutes, I'll tie it up. If it's to start investing, you can use a kind of traditional investment account called brokerage accounts. No big tax advantages, it just kind of grows, but it's accessible, should you ever need it. And then the other side of that for long-term is retirement accounts. So you get tax advantages, either deduction today and then pay taxes when you pull it out, or pay taxes today and get it tax-free later. Those are called traditional versus Roth accounts. So, that's really an individual. The hard thing I think about books and stuff to point you to and what we do, it's hard to give personal advice to 300 million people at one time. And so you have to kind of look at your individual circumstance. If you're higher income, might make more sense to get the tax savings today and pay it later, versus the other way. Then to invest, obviously I'd say things like mutual funds. You can find, stock mutual funds making a balance between stocks and bonds. But there are a lot of what we call risk-based funds. A Vanguard or a Schwab will kind of have a mutual fund that is a little built-in portfolio, and that's the best way, I think, to go, unless you really know what you're doing and buying separate things. Because I'll tell you now, our money or our mind makes us make terrible decisions with our money. And there's a whole field of research called behavioral finance that'll prove it. So the more you can set automatic, that you're not having to go in and tweak and, it's going to go down. That just happens, right? But it's like 2 steps forward and 1 step back over the long term. You make it there, but you have to ride through the downs is the best advice I can give you. So in times like right now, the best thing to do is just not look at it. And so you will be much better off down in the future if you just don't pay attention sometimes.
Well, and it is very important to have someone that personally, right? Not necessarily a broker, but a financial planner, right? That you can meet with personally, right? Either through your company, or since we're independent artists, you need to have somebody like John, who's your personal friend and that you trust to manage your money for you, right? So there's John.
I'm going to ask you a question. Through the personal financial planning department out at Tech, does that area provide any kind of public service meetings or anything? Or are some of the students, y'all ever set up where they can just meet people in the public to provide some kind of that because you might not be able to afford a Brad or a John to start with, but there might be another source. So maybe through tech.
Absolutely. So I think that's the next question is how do you find somebody to work with? But just to answer that, and then we'll come back to the other question. Yeah, Charles Schwab Foundation. Schwab's a big financial company. Recently gave us money to start a community clinic, and so it's going to be located, well, I'd say at the old Bank of America building, Merrill Lynch, on 19th and University. So it'll be open to the public. Kind of not meant to be for millionaires, right? So it's meant to be for just working people that might not be able to access financial help elsewhere, with the goal of helping us train our students to work with kind of one-on-one with people. So we're hoping that kicks off in the spring, and so we can keep in touch with Stacy and see how all that works and how it might help you to come in and get some kind of basics. We're going to do just presentations, and but again, the ultimate goal is to have one-on-one help with between our students and the community.
That is so phenomenal. And in this day and age, that sort of information and help is available to all of us. Because, I remember starting out in the music industry, and there was no kind of help like that. Just throw you in the deep end and you either swim or drown, right? Well, that is such a fantastic thing that's going on there. Roger, why is it important to have an established relationship with a financial institution?
Well, I'm going to be very biased on this because I'm from a bank, but I think it's very important to have a relationship, because I don't know if you've gone around town, but you can't hit any corner in Lubbock that doesn't have a bank. There's large banks, small banks, local, there's national banks, chains, and we appreciate all those. I'm not here to knock them. We all offer about the same product. The only thing that we can offer as a local bank would be service, and our goal, and then we would work with y'all. The customer is our ultimate goal. So what was the question? I went off on that. So the importance is, like, if you needed a loan, you could come in and talk to us and we could walk you through it. And if it wasn't a loan, if you need just advice on your checking account. I mean, a lot of people have checking accounts we have fraud protection. There's all kind of things that happen. We would work with you. We would want to establish a relationship with you. As a local bank, we make exceptions, and we do, to go back to the earlier conversation. If you had an account with a local bank, we would try to help you get a loan, but we would also try to help you understand all the fees that come along with it and all the things that could go wrong. We have fraud protection, but we can also do exceptions. So if you came in and you didn't have a lot of income, or you were having trouble proving it, as a local bank, we're going to work with you to say, okay, well, if you have this receipt, you have an email, we can do that. If it was a national chain, and again, I'm not knocking them, their rules are a little more stringent, so they're not going to be able to make those exceptions. So I would just say, know what you're looking for. If you have receipts, if you have things, then you can look at any bank. If you are going to need more, maybe one-on-one personalized help, then you might look for a local bank that can make some exceptions to help you.
Well, I grew up in a small community right outside of Big Spring, Texas. My dad bought, sold, and restored antique cars. And fortunately for him, he had a personal relationship with the owner of the bank there in Cahoma, Texas. And I remember that when he would want to buy some money or get a loan for some money, he would take in the title of this 29 Model A as collateral. So I don't know if we still have that kind of thing going on in banks. So, look around. What have you got as collateral, right?
I was going to say, we'll get this relationship stuff. So just my experience, both as a CPA advising people and then also as a business person, having a personal banker has been one of the most valuable things in me and my business through my entire career. And so start with, you have the option to have a checking account completely electronically where you never go to a bank anywhere. I know there's all that stuff's out there, and people love to do that. My comment to you, if you do that, is you're moving yourself away from ever having a personal banking relationship. So I would encourage you, if you're serious about being in business and you think you're going to be in business for all of your life, I would have a checking account, hopefully a savings account, with a local bank, if at all possible. So that relationship then is there when you need it most, and you just can't get that off the internet. So I can't emphasize enough. If you go in to talk to Rogers, loan people, and they say, well, where do you bank? Where is your checking account? Oh, it's with the Tasmanian devil, deal someplace. And they're like, okay. I mean, you've already just moved yourself out, partially out the door, because if they say, oh yeah, well I bank here already. Oh, great. So anyway.
When the car title brought up another thing, please, 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 if you need money, do not, and I shouldn't say this, so don't video it. Be very leery of car title loan places, or a lot of these loan places will give you a quick $1,000 if you give them your title. You will almost never pay that off. You pay thousands and thousands times over the initial money that they gave you. If they gave you $1,000, you're going to pay 7 or 8. I mean, it's just so difficult to get out of that rotation. So bank anywhere you want, but if you need quick money, please be leery of some of the quick cash places.
Yes, good advice.
There's no shortage of folks out there trying to separate you from your money. So be very careful. Brad, you work with a lot of musicians, so tell us, what are the possibilities for future investments, such as selling your copyrights, leveraging your songs' publishing rights for investment purposes? What have you seen that works?
I didn't write an answer to that one. Okay. I'll wing that one. So, well, an interesting book that I read a long time ago, which technically applies to everybody in this room if you are going to be in business, is The E-Myth. It's an old publication, but one of the main things I remembered from that is begin with the end in mind. So every business, theoretically, although when you're an artist, a musician, you're doing a service business, but if that service business grows to something that has value, residuals, it could be royalties, you've got copyrights, you've got, again, actual physical paintings and things like that have value, then your end game, if you begin your business, the end game is that you're going to be able to sell all of that and maybe sell what you've accumulated as an intangible to somebody else. So you are trying to think about 20 years, 40 years, y'all are young in here, get closer to my age, and it's like how do I get out of this, and can I capitalize, can I monetize all these years of effort? And so I'm not good at the current, I'm not up on copyrights and royalties and things like that. It's just my sort of observation that world has been beat up by streaming and all of the other things where in the day when we first started as musicians way back, you could really count on if you came up with a product that you were able to license and get it out there in the world, and it would create a cash flow stream for you. And so I think what I observe is I think that's a lot harder to do these days, especially at the dollars they're willing to pay for stuff. But all that's to say is that you do need to be careful with the artistic material you create so that you can document it, whether it's through copywriting, filing for copyrights on music, filing for copyrights on literary things, art. If your painting is going to be, this, and keeping it from somehow getting out on the internet and getting away from you, there are attorneys that can give you some better counsel about that. But it's important to think about how the hard work you're doing, can it not only pay me once, but pay me multiple times, because you're looking for long-term, like mail money, what we used to call mail money, to come in. So did that get anywhere close to what you were thinking about on that?
Back to John. When do you need a financial advisor? How do you find a good financial advisor? What does it cost? And what services should you expect?
The first thing I would tell you is never feel bad that you don't know the answers to this stuff, because we're never taught it, right? I bet you at best you had, I don't even know if they even teach balancing checkbooks anymore in school. Look online and see if the number's positive. Leave me alone. This is all this gray stuff over here.
What's even a checkbook?
If you have checks, doesn't mean you have money in the bank. That's what it used to be the joke. And so just, never feel like embarrassed or afraid to call somebody. So whenever you have a question, it's good to have somebody to bounce the ideas off. And so as Brad said, there's a lot of different ways that financial planners have a business. And so, we're in the comment of affording, we're fairly large, typically work with, the way we charge, work with larger sums of wealth. But everything's the same kind of as you go through. Everybody's got the same problems, same solutions that we'd approach. But so at some point, you'll probably get there, hopefully you get to that point. And it also opens up a level of complexity, right? So, the more stuff you have, the more complex life gets with taxes and estate planning and all these other things. So, starting out, what I'd probably encourage is there's a big movement of especially younger financial advisors that not working for bigger firms like ours, or the larger ones you see around town, and having their own thing and that they can control. And they typically charge just an hourly fee. And so you just get in touch with them, have a little consultation. You'll pay them to do some background work and chat with you and kind of answer those questions to get you off the ground. And then as you start saving, more money, maybe that works for you. If you want more, typically open up to more service and customization, start looking at different firms. And there's a whole lot, a huge discussion that we could have about who's the best firm out there and what type of firm and all that stuff. I think, as you said, people is the main thing, somebody that you can trust. So finding somebody that you can trust, look at their education and their credentials. So for financial planning, CFP, Certified Financial Planner, is kind of the gold standard of comprehensive financial planning. There's lots of, what we have today that didn't have before are students that have gone, or college programs where students go through and get degrees in financial planning, right? So at Texas Tech, we have students that have bachelor's, master's. My PhD is actually in financial planning. That's been a big change over the last 20 or 30 years. And so, seek those things out where you're seeking knowledge and somebody you feel you can trust. And I think that'll lead you to the right place, at least at the beginning.
One of the main things that Lubbock Cultural Arts and this group and Stacy provide for artists across the board here in West Texas is networking. That's the key to success in our business for sure. It's the old saying, it's not what you know, it's who you know. It's how many people you know and who knows you. So, Stacy, thank you for being such an integral part of that networking, and it works for everybody. And that's where you meet somebody who knows somebody whose brother-in-law is financial advisor, right? Or you meet somebody who's married to somebody that works in a bank, that you trust those people all along the way. So that's how we become successful in managing our finances. This is a complex world here. I remember Brad talk about the days we used to aspire to get mailbox money. You know, if you're a songwriter, you have to be a member of what's called the PRO, a performing rights organization, like ASCAP or BMI, and they collect money on your behalf from radio and television and theaters and all that. Anybody that uses intellectual property music, and depending on if you get some consistent play from those different varieties, every 3 months you would get a little check in the mail. Well, a couple of years ago, I got informed by ASCAP, the American Society of Composers, Authors, and Publishers. I'm a writer member and a publisher member, that if I wanted to continue to receive mailbox money, I would have to give them my routing number to my account. So I don't get any mailbox money anymore. It just goes directly to the account. But that's okay. Spends the same. But that's, as Brad was saying, it's important to you that you hold on to your intellectual property. It doesn't matter, your art, however you monetize it, or, if you own a dance studio, you own all your customer list. That becomes very valuable to you, and that's something that you eventually can monetize. One of the big things that's gone on the past several years is all these big songwriter artists, Bob Dylan, Neil Diamond, Pete Townsend, Lindsey Buckingham, all those people, they have sold all of their copyrights to big publishing companies. In fact, there's probably about a half a dozen big publishing companies now that own 90% of everything that you hear. And, I remember Pete Townsend sold his 400 song catalog a few years back for $100 million. Of course, Sony that bought that made that back pretty quickly because every single CSI television program uses Pete Townsend songs. So that's what the big companies are looking for. So your work, your intellectual property has value. I'm just going to let each one of the panel here talk about how do you place a monetary value on intellectual property.
Well, this gets to be a tough discussion, because sometimes you have to decide if it's just what they call pure blue sky. It's just a wished for kind of, I think my stuff is worth $100 million, or does it have to be boiled down to a much more mathematical, formula-based analysis that basically says you have intellectual property you've built over the years. You've sold 100 pieces of art. You've sold, thousands of songs. You've got copyrights. You've got royalties. You have cash flow that comes from this stuff, and then you monetize that cash flow into a value, and say, okay, well then if somebody was going to buy my cash flow, and I've got this much money that comes in from my intellectual properties on an annual basis, what would they pay me? And so there are formulas that are out there that you can use to try to determine that. And just to put it into more hard terms, literally, real estate is sold many times based on projected cash flows, and they monetize that into a value by saying, oh, well, we want a 10% net annualized rate of return of, and they go through these calculations and they can come up with a value and say, well, that's it. A similar approach could be used on intellectual property, and the problem for artists and musicians, again, same thing but not, is you just don't know sometimes when that cash flow might really mature. So just because what it is now doesn't mean that something really spectacular might happen and fall in your lap, that suddenly what was a small cash flow turns into a much nicer. And how would you know how to have already valued that if you were trying to sell? So it's a tough thing to come up with that number. So I'm not sure I can give you an exact formula, but a lot of times it's based off cash flow. So Sony buying that product, they looked at that on pure cash flow numbers about what they already knew that had been going out over the years for that catalog and what they wouldn't have to pay if they owned that. And they just crunched numbers and they came up with that. But on a small scale basis, that may be a lot harder to calculate. Anybody else think about an intellectual?
Well, I'm not an I can't even say it, intellectual property expert, but I think, Brad hit it on the head, right? That it's somebody buying it from you is going to buy it to not house it in a museum, but to turn around and make money on it, right? So, number one, anything, doesn't matter if it's real estate or intellectual property, your songs, your art, whatever it is, it's worth what somebody will pay for it, and so that's where you have to kind of disconnect. And it's hard as a entrepreneur, which you all are, right? If you're independent, doing your own thing, it's hard to separate those two, right? So small business owners always way overvalue their business because you have that emotional tie to it and think it's worth this, but in reality, and it's hard to pinpoint it because you don't know exactly what it's going to produce in the future. And again, Sony definitely looked at it and said, how fast can we turn this stuff around and make money on it? And they want to get paid back in a certain amount of time, and you can go in and calculate exactly what you would pay for that in order to kind of make your money back and keep making money after that. So it's a hard thing to tie down, but just know there's a realistic way to do it, and just remember to separate your emotions, and ultimately it's what somebody will pay.
We only want it when you have it.
Yeah. Yes. Once you monetize that, the bank would love that. Yeah. So it would go back to a little bit to Carrie's statement about networking. Then, if an opportunity came up that you thought you might be able to sell either one thing or a number of things that you had, then it would be good to reach out to a network of people. And I talked to an attorney because you want to talk about what are for sure the things that you're selling off or not selling off. What is, how are you going to, are you retaining? You could sell something and still retain a royalty. So there's all ways that could be done. So networking, having a good attorney, you don't all need a CPA, but maybe someday you might need a CPA to help you with taxes on financial planning and the bank. So you got 4 potentially crucial professionals there that you might need to call on at different stages.
So adding to that a little bit, not to keep going on, but there are, as a good financial planner, and maybe agree is like a quarterback of your team, right? And so, I'm not a big football fan, but you get the point that they're the ones calling the shots of what's going on and making sure everybody's doing what they need to, not the boss, but just somebody to bring everything together. There are financial planners that have work with niche markets, right? Like most of the time, I think it's just a marketing ploy, right? That, I work with X only, but there's no special problems. I could see actually a niche of working with musicians. And so I'm sure there are financial planners around the country, and post Zoom, I can't imagine any financial planner or firm not having some virtual option these days, right? It became absolutely necessary. So I'm sure there are financial planners that really focus on working with artists and musicians that know these type of answers for you and can help and have that network already established to contact when those things come up. So another thing to look at is anybody doing that in a virtual setting.
There's an old joke from back in the early days of the music business. If you have a hit record, you then need a business manager, a road manager, a tax attorney, and an accountant. So you pay 50% of everything that you get to make sure that 90% is paid to you of what they owe you. So, which brings us around to the big elephant in the room these days is cryptocurrency. Bitcoin, non-fungible transactions, NFTs. I know very little about that other than I still haven't been able to get anybody who's into all that to tell me how I can take all this money that I make on Bitcoins and buy a cheeseburger. So anybody have any idea about this new cryptocurrency?
Banks love it. I think bankers.
We won't touch it.
I'll start. So I won't start with anything. So, back in the 1400s, I think it was, tulip phase. So tulips were a big investment, like the flowers, right? Like, and it just went absolutely skyrocket crazy. What's special about a tulip? They live, they die. So there were two things at play, right? One is called fear of missing out, right? So if this is the new thing, I got to get on it. I don't know why I'm doing this, but I might miss out on something. And the other one, these things rely on what we call the greater fool theory, meaning that if you buy some cryptocurrency or any of these things, the only way it's an investment is if you find a bigger fool than you to sell it to later on. If not, you're held, or you're there holding the bag when everything goes.
Ended up being the bigger fool.
You were the bigger fool. It stopped with you. The problem with the things, number one, totally agree. Most people have no clue what you're buying or what you're getting when you try to ask somebody, because I get asked a lot, especially from younger friends and stuff, and they automatically think blockchain, this whole computer algorithm thing. That is not what Bitcoin is. Bitcoin is something, I don't know, I don't understand it, that's created from this blockchain technology. And so if you want to invest in blockchain, you invest in companies that write code, right? Because that's, ultimately who's doing what. The coin is a tulip to me, right? So an investment should have some value today. So you as a musician have equipment of whatever sorts at home that has a value. You can make money by either producing more art or having more gigs that has a future cash flow. And so I can basically do some math with formulas and find out what your business is worth. So Bitcoin has none of that, right? It doesn't produce anything. You can barely use it. One of the South American countries tried to convert it to their currency, and you can't even get it anywhere, right? And most stores don't even take it, right? So even though it's converted to this national currency, the U.S. is not going to, no mainstream country is going to allow a secondary currency to run around. The third, or whatever, last thing I'll say, obviously this is all negative towards it. It's not regulated, which is also why people think it's the next best thing, right? Because we get to bypass Lubbock National Bank and everybody else. But when everything comes crumbling down, right, when your Bitcoin gets stolen, or somebody ran off with all your money, the code,
to that,
right?
This one,
Yeah, and guess what happens? Everybody wants to get paid back, and I should have been told, and that is why we have regulation, right? So you can't have both sides of it. You can either have something that's very regulated, which is what we have with our banking system, and currency that's backed by the government, or you can have whatever Bitcoin is and hope somebody takes it, or you have a greater fool to buy it from you.
I think John's covered that really well. I'll give you just a tad bit of insight as an observation as a CPA. I prepared tax returns for 47 years. The government hates this. I know if you think that that there's movements for, well, it might be political movements in Congress, or somebody trying to make a more useful in adoption of this stuff. But I can just tell you the general operational United States government treasury hates crypto. And it is on a mission to try to figure out how it's going to get its arms around this and tax it. So they call it currency, cryptocurrency and stuff. The tax law pretty much looks at this as being just an item that is being bought and sold, and it has potential for taxation. And, so currency can be exchanged from the United States to Europe and different things you can have. And that normally is not a taxable transaction, even though you might have different rates that apply. You take $1 in the United States and you get less of this or more of that. You can move it into being a professional currency trader. But just let's say normally that's not a taxable transaction. Crypto exchange, you somehow exchange your kind of Bitcoin for some other kind, or somebody gives you X amount of Bitcoin because you did something, and then you want to take that Bitcoin and go buy something. The government's looking at all of those transactions as potentially creating a taxable trail that they need to extract taxes out of. Bartering is sort of similar to crypto, because bartering is basically a full faith and hopefulness on the people involved with the bartering. There is nobody standing behind it. So you barter your services I barter my services with the plumber, and hoping that a year from now when I've got a plumbing disaster that, oh, have you still got that on your books that you owe me? I did all this for you, and now will you come out and, fix my leaking, my hot water heater that's flooding the house? If they just say, oh, I don't have time to do that, what are you going to do? That there is nothing tangible, nothing to support that. So I as a CPA, and I am not wild about anything about this version of crypto that exists at this point. So I just know the government, again, is really trying to get after it. There is a question on every electronic filed tax return now about, did you engage in any kind of cryptocurrency? And you have to answer yes or no to that. All I can say is they're just starting their database. And so they as to how, but corporations are 20 years ahead of the government on using big data, but they will get there, and they will tax this. So I won't take any clients that are doing anything. I've got people who've called me, they're crypto miners and stuff like that. Won't take any of them. It's just too fraught with problems.
Well, I don't know if you remember, Brad, in the late 70s, there was a group of, a handful of businesses in the Lubbock area that started a barter system. And it was, the guy that owned the appliance store would come to the music store and say, I'll give you a microwave for that Gibson Les Paul. And it kind of worked for a little bit until the city government got wind of it, that nobody was paying any sales tax. So, if they can't tax it, you ain't going to use it. Well, do we have any questions from, yeah.
Financial planning deal that we didn't specifically ask, but this is asked for me. Brand new businesses, one of the questions I always get as a CPA is, well, how much money should I put back for taxes? So this is really crucial for especially musicians and artists. You deal with a lot of cash and stuff, and if you're going to be, somewhat truthful about how much of your income you're reporting and all this stuff, how much money should you put back for taxes? So I'm going to just give you this as a rule of thumb that Brad has come up with over 47 years of watching people try this, and many of them fail and get their fannies. You don't want to be, whether it's Willie Nelson, who spends 10 years of his life repaying the IRS for failure to pay taxes. I don't know how many albums he issued that actually the government had all of the royalties on them and everything. It was pathetic. But so here's my challenge to you. Take 25 cents of every dollar you make and put it away. And it has two purposes. Its first purpose is to pay all of your taxes, and if you haven't ever had somebody explain self-employment taxes, what that is it's the Social Security, Medicare taxes that are collected in this world. Businesses have a different calculation than when you're an employee, but it could be about 15% of your profits, and so there's 15% of your 25 right there that you may need to have put back. Now we can get into lots of reasons why that's way too much, but this is a good starting point. Then the other thing is you need income taxes. Well, how much income tax do you pay? Well, it's a percentage of your income. Well, maybe you should put back at least 5 to 10%. The lowest tax rate we have in our country right now is an 8% tax rate. And so it doesn't take much to get past that. So 10% is an income tax is a good thing. So you got 15% Social Security, self-employment, 10% income tax. Most people will not need that whole 25% when they actually calculate their tax return. So maybe you only needed 17%. Then the rest of it is for my man John here, because you need to put money back for yourself in retirement, investment. So you need to force yourself, cash flow budget as a business person up front, save 25%, and hopefully it covers your taxes and starts you down the road of doing something with the non-tax dollars, investing for long term. Okay, good. Yeah.
So adding on to this, don't discount how much your future self will thank you for getting started early, right? And so depending on your age, the average person starts saving for retirement at what age? Do you know? Take a guess.
40.
Usually 50s. So who's out of the house at 50? Kids. So kids cost money, college costs money, all that stuff gets put towards that. You don't start saving until your 50s. The longer you wait, the more you have to, not just years. We're talking like the compounding part, right? So your money makes money on its money, right? And so you can't make that up. That is all due to time. The more time you let that sit, the better you are. When you start in your 50s, you don't have that time anymore. Now you're starting to save, instead of saving 10 cents for that dollar you need to save or spend in retirement, you got to save more like 80 or 90 cents. So you have to save so much more to get to that same end point. So yes, start early. And like I said, I want to add too, I think I love this job because I love helping people and working with people. And I'll talk to everybody, I'll answer the phone. And I think everybody up here too, right? If you have questions, like find the network or reach out to us, right? It might not be a right fit. As Brad said, maybe you're in cryptocurrency all day long. I'm not doing anything with that either. So, but we might know somebody we can send you to get that help or point you in the right direction. So don't take the comments of affording and stuff like that. Like reach out to us. We know a lot of people, and if it's not the right fit, we can definitely point you in the right direction.